Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Nieces and nephews, history has been made. This is incredible. And what is that history that has been made? We officially got new all-time highs, guys. We got to talk about this. We got a new week that's coming up, and Uncle Charles is going to give you the trading plan for this week. How the hell are we going to trade this? Well, I tell you this. We are going to continue to use price action to guide us because we are sheeps. Price action is the shepherd. Bah! And we're going to play this with no greed, no fear. We're going to do this tactically. We got new all-time highs, guys. But before we can even talk about the potential future, where Uncle Charles covers the bull case and the bear case, we got to be prepared for either scenario. Before we talk about that, we got to talk about how did this happen? This is where we go down to a smaller time frame. And this is a very important part because a lot of people like to skip over this part and just get to the trade ideas. But guys, it's important to learn the price action concepts so that we can use the levels properly and try to increase our odds of winning. Okay, I can't be a legend unless my fellow sheeps are winning. Okay, it's impossible. If you guys aren't successful, I'm not going to be successful. Okay, as far as being Uncle Charles goes. Okay, now what's the one thing that I preach on this channel? I preach that we should always do our best to trade with the traps because this market is manipulated. Please, if you haven't already, look up about Wyckoff or Wyckoff, however you want to pronounce it, and look into and read about the composite man. Learn about the composite man. From there, go down that rabbit hole. Learn about smart money concepts, dumb money concepts, stop loss hunting, all those type of concepts. And it will make you, or I will hope it will make you realize how trappy this market is and that it's very, very important that we try to trade with it. To trade with the price action is to trade with the traps because we use the price action to help us react if there is a trap, but our goal is to trade with the trap. Does that make sense? We use the price action as a tool, as a guidance. So let me explain. I had this 473 level. Okay, this level has been mentioned multiple times these last couple of weeks. 473 level. And look what happened on last Thursday. We chopped, we broke down, and what did we get? A false breakdown setup. Sorry about that. A false breakdown setup. And what's a false breakdown setup mean? It means they trapped the bears. Anyone who tried to short the breakdown of 473, they trapped the bears and then they recaptured. Bears got trapped. All right? And they don't just trap the bears when they do this. They can trap the bulls as well. Anyone who longed at 473 may have set their stop loss below 473. Guess what? They took out that stop loss. Stop loss gone. Stop loss hunt rated. Used them as exit liquidity. Bam! Pushed it right back up. So bulls and bears. You see why these trading with the traps is important because they try to fake out both bulls and bears when they do this. When they make the real move, they want as little as retail traders as possible to benefit from it. How many retail traders you think were bearish these last couple of weeks or were expecting some double tops or something? Some may thought we was going to come up short. You know what I mean? And bull bias traders, you guys probably think you deserve credit, but you guys get it being biased. It's more based on luck than skill in my opinion. But either way, if you made money, who gives a damn what I'm saying? If you made money, who gives a damn what I'm saying? Don't take it too personal. All I'm trying to say is trade with the traps. And this move started off with the false breakdown of 473. And look what happened later that day on Thursday. Cleared 475. The 245 candle on Thursday treated 475 as support. And look what happened next. 477 was the high of last Thursday. So I put a pink trend line there. Boom. You see this pink trend line. And then what happened Friday? Context matters, guys. It was coming off the momentum of a trap, of a false breakdown setup. You have to ask yourself, who was the last to get trapped? Bears. If bears are the last to get trapped, you don't want to be a bear. You want to be a bull because you want to trade with the trap. And then we cleared 477, which was Thursday's high. This was in pre-market, though. So we couldn't trade that if you option trader. But during the trading hours, what happened? We back tested 477 as a support. Resistant turned to support. Thursday's high became around Friday's low. You have to ask yourself this as well. You have to think, is this bullish behavior or is this bearish behavior? You have to think, is this bullish behavior or is this bearish behavior? Yesterday's high or Thursday's high turned into Friday's low. Resistant turned into support. That is bullish price action behavior. And this was addressed in the group. And from there, we identified scenarios. If we bounce from 477, but then eventually drop down, that could be a dead cat bounce, and I would short that. But if it cleared 478.6, which is a fib level, right here, fib level, my 1.382 fib level, that's an extension level. If it cleared, that would have been bullish. We did clear it. It was a battle at first on the 15-minute chart. Less noisy on the 30-minute chart. But like I say, you know, these market makers, they're going to try to make it as hard as they can on us, right? So you play with the traps. False breakdown right here. Recaptured 478.6. And boom. Beautiful breakout. We cleared all-time high, which I rounded up to 480. Cleared it. No false breakdown. No false breakout. Just cleared it. And it went up to new all-time highs. You got to trade with the price action. You got to follow and trade with the traps. In the direction of the traps. When you trade with the traps, you lower your odds of becoming a victim of the traps. They're always going to be traps. That's what the market makers do. So you got to train your mind to trade with it, to be on the lookout for it. False breakdown equals calls. False breakouts equals puts. Okay? And you play it level to level because sometimes the market it's tricky. They'll give you a level move. Sometimes they'll give you more than level move. But you play it level to level every time because you want consistency and you leave runners. Your runners can catch those bigger moves, those bigger home run moves. And when you build your consistency, for those stressing, Uncle, when I trade your style, I only make $100 a day. That's not enough. Well, let me tell you something. Those $100 a day consistently, those lead to $1,000 a day consistently. When you can build your consistent, you go 1 month and you go green, scale up the next month. If you were green that month, scale up. Every month you do good, every month you are green, scale up. If you didn't do green, don't scale up. Scale down or stay the same. It is a journey that you cannot rush. Uncle Charters' trading style is not a get-rich scheme. It is a get-rich slow scheme. We got to be tactical, strategic about this. If it comes fast, it's going to leave fast. Okay? Take your time. Build your consistency. Don't take on too much risk. Focus on level to level. When you build your consistency, if you're making $50 to $100 a day, then consistently, then you scale up. And this will lead to 200 a day, then 500 a day, then 1,000 a day. But the goal is to build consistency first by learning to trade with the traps and reading the charts, price action, behavior. You guys see this? We are at all-time highs, guys. Now, what is the plan next? Now it's time to talk about the future. What can possibly happen and how we should react to it. As you guys know, all-time high, the previous all-time high from 2021 was at 479.98, the high. Okay, the high. 479.98. I'll round that to 480, and we cleared that level. So we got two critical support levels to watch. We got 480 and then the fib extension level at 478.6. Do not call a top. Call out the call out the market makers for their bullshit. What do I mean? Call out the false breakouts. Call out the false breakdowns. Call out the traps. Call it by name. You understand? Don't stop calling tops and bottoms. Tops are usually put in by false breakouts. Bottoms are usually put in by false breakdowns. So don't call tops. Call out false breakouts. Don't call bottoms. Call out false breakdowns. Don't talk like the majority. The majority talk like, oh, top, bottom. They try to act like they could see the future. Somebody last week or something said we was going to get a double top rejection. We did not get a double top rejection, guys. And somebody else said we was going to go to 480 by Monday. We passed 480 before Monday. There is no point and there's no reason that you need to predict the market and try to be the next Michael Burry. Okay? That movie done messed a lot of retail traders up. Everybody trying to be the next Michael Burry. Goodness gracious. Stop it. Just stop the madness. Stop the tomfoolery. And trade with the price action. Trade like a darn professional. Trade like you know what you're doing. Okay? And you know this market is trappy. You know calling a top is wrong. Okay? It's wrong because a lot of retail traders do it, and majority of retail traders, 90-95% loses. So why do you want to copy people who lose? Copy those who win. That's all I'm saying. And the people who are winning, guess what? They're following algorithm. They're following an algorithm and they're trading unbiasedly. You know how I know this? Because majority, there's an article out there, majority of these big money players, they're not even trading themselves. They're using bots. They bought the freaking trading bots. They spend so much money. The majority of them are using bots. And guess what? We are competing against bots. You think these bots are emotional and biased? Or I only trade if it's bullish, or I only trade if it's bearish. These bots don't give a damn. They just follow an algorithm that'll secure profits and manage risk. You're battling against robots. AI is taking over, damn it. We gotta smarten up here and increase our emotional intelligence. Stop trading with our ego. Stop trading with our pride. So let's trade smart. Let's trade like these bots. Matter of fact, these bots need to be learning to trade like us. We're the one that created them. Uncle Chart is losing his damn mind with all this AI stuff. Anyways, I love trading NVDA though. So, as long as above 480 and 478.6 lowest, I am still bullish on it. Bullish fall through would be to clear 482.72. That was Friday's high. If we clear 482.72, I got the next fib extension level at 484.5, and then I have nothing above that until 490 plus. Okay? If you want to get bearish, we need a false breakout setup. 480 and 478.6. If those support levels fail, that's our trigger to go short. If we fail those support levels, that's a sign that the market's not ready to go higher, or breaking above the previous all-time high could just be a stop loss hunt, a liquidity grab that could lead to more downside. All right, another sign that we could be topping out, because look at this big body green candle. It's a decent body green candle. Is if we gap up tomorrow on Monday, or we chop. Okay, that could be an evening star pattern forming. Okay, that's just some scenarios to watch out for if you are bearish. But overall, you need the breakdown of the previous all-time high, 480 and 478.6 to fail. If those levels fail, then look to short. All right, and then below that, let's say we gap down. Then below that, I got the next support at 477 and 475. Remember, 477 was Thursday's high and Friday's low. The market recognizes 477 as a pivot level. So if it break down, like if we gap down below these levels, the next support you want to watch if it's going to break down is 477. If it does, then you can short some more or continue holding your puts. Does this make sense, guys? So above 480 and 478.6, stay bullish. That means look to long. Look for buying opportunities. False breakdown setups or breakouts of resistance. But if we break down 478.6 and then you see 478.6 retest as resistant and actually reject, guess what? That's the market makers accepting that level as the new supply zone. And that is a very bearish sign that we could head down lower. Does everything I'm saying track? Chat? Are we tracking chat? I think that's how the kids are talking now. I don't know. They say the word chat a lot. Anyways, triple Q, here we are. Another new all-time high. Just blasting through these fib extension levels. We cleared 419.6. That is the support level I need y'all to watch. this coming week. If we break it down, then we can short with 417 or lower in play. However, as long as above 419.6, stay bullish. Next resistant fib extension level is 421.7 and then 423.7. Those levels clear. Don't you argue with the price action because we are likely heading up higher. All right, here is Tesla. Oh, that's a 30-minute chart. I was trading 30-minute chart. But yeah, we did get some type of bounce. We did get a lower low going as low as 207.5, which was actually one of my support levels. Incredible. All right. But yeah. I got 212 as a level. Remember, we had a double bottom on this from Tuesday and Wednesday. It was buying pressure there. We closed at 212.19. Not a convincing recapture. But overall, if we can stay above 212, it could be a possible false breakdown setup. Putting 213.5, 215, and 217 in play. And the next fib extension level at 219. That could be a possibility up there if we clear 212. All right. Bottom is in if 219 recaptures because that is a fib level. Bottom is in, or a short-term bottom is in, because even in the downtrend, we'll get lower lows and lower highs. So the lower low could be a potential short-term bottom that could give us a deeper relief bounce. But it will have to clear 219 if it wants a deeper relief bounce to the upside. Still overall bearish, but short-term, 212 and 219 are the two main levels that would need to clear. Not every level I have is critical. Those are minor levels that you can use for level to level. But those are the two critical levels, 212 and 219. All right. Overall, if we're below 212, 209 and 207.5 are next support. Those levels fail, guys. It's going to get a lot more nasty for Tesla. NVDA, we're at new all-time highs. What the heck? How are we going to trade this, Uncle? Are we going to over 600? Possibly. Very possible. Let me make this a little longer. Okay. What was the low for this candle? 547.4. Okay, perfect. So 589.2. It's one of my fib extension level. We cleared that, went to new all-time highs. It's around 494.7. We did get a pivot low intraday around 492. So I have that 492 level as support at 489.2. Those are the two critical support levels for NVDA. If those levels fail, I would look to short personally. Okay? As of right now, we're at new all-time high territory. Last Friday's high was 496.5. If that level's clear, guys, I know that some people got 600 target, crazy, but hey, this stock is crazy. So if we clear 496.5, we are likely heading up to 600. It's not officially one of my support and resistance level, but hey, it is, the 600 is an even number. Very possible we go hit 600. But like I said, it has to clear 496.5. All right, to be bearish, 492 and 489 needs to fail. I didn't cover IWM. Okay, IWM still bounced off that 50 daily moving average from last week. And then it ended the week by recapturing this blue trend line. So overall, it needs to stay above 192.5 to stay bullish. Preferably clear 193.3. And if that happens, we are likely heading up a lot higher. 197, 198.7, maybe up to 200. Okay, I'll only switch back to bearish below 191. That level's failed. Bearish will likely go back and test the 50 daily moving average. And it's very possible the 50 daily moving average does not hold on the next test because it's a little weaker now. All right. Apple, bullish, recaptured the 50 daily moving average. That is a false breakdown setup based on the 50. And we also cleared a fib level, which was at around 191.2-ish. Okay. So if we can stay above 191.2, maybe clear 193 as well, we're likely heading up higher, 194.5. Very possible we go up to 198, okay? I would only switch back to bearish if we drop back below the 50 daily moving average, okay? The 50 daily moving average is at 190. It's going to creep up to 190. Short below 190. Otherwise, stay bullish above. Microsoft, very bullish. I had the zone, Fibonacci extension zone, 395.5 to 396 zone. It was a battle there intraday, but eventually cleared it, going as high as 398.6. Congrats on anyone who catch this move. I know some of my Discord members who traded Microsoft. Great stuff, guys. If we clear 398.6 on Monday, guys, I have the next fib extension level at 42.2. Yeah, it's a possibility. If a lot of people, a lot of retail traders are bearish on this, market maker is going to push it up. So 42.2 would be the next target. I would only turn bearish if you get a false breakout setup. That means it'll need to break down 395.5. If it does, look to short. Lower targets would be a play 393.5, 390, possibly 388.6 would be a target. And below 388.6, I would favor a deeper pullback. I would be bearish. Okay. AMD, holy moly, holy moly. I love this stock. I almost love it as much as I love NVDA. Yeah, previous high based on the fib extension level was at 172.5. Yeah, based on a fib extension level, the 200% fib extension level, 172.5. That is support, guys. Stay bullish as long as above. Stay bullish as long as above with next resistance at 174.25. That level is clear. We are heading to new all-time high. We're flirting with new all-time high, guys. We're going to uncharted territory here. Yeah, very bullish as long as above 172.5. If you want to play a pullback, we got to break down 172.5 to put 170 and 168.3 in play. If those levels fail, bearish for the short term for potential pullback. Targets would be 164, 161.7, and 159-ish. All right, but overall above 172.5, the bounce could possibly continue. All right, Google, bullish. It cleared that 147.3 level as long as above. We're bullish. 149 and 150.4 are the next resistance level. Okay, those are the next target as long as above 147.3. Don't short unless that level fail. 147.3 and 145.7. Okay, those are support. If those levels fail, then I would recommend shorting, targeting 144, 142.3, and 141. Otherwise, we got a breakout here. Okay. Netflix is just don't know what the hell it wants to do. It's still making, in an uptrend, I would say, higher highs and higher lows, but working its way off this low right here. If it wants higher highs from here, it's going to have to clear 486. If it clear 486, that's the trigger to go long. It's struggling there right now. Not much momentum from the bears either. Bouncing off previous buy zones. Intraday, these are beautiful moves if you're trading level to level style with runners. But if you're talking swing trading, yeah, it's overall chopping a bit. But yeah, above 486, I would long and favor some more upside. 488, 490, 491.5, maybe higher than that for the higher potential higher high. Do what you feel is best. But yeah, if we can break that level, I would swing some runners to the upside. As far as being bearish goes, support levels are still the same that I'm watching. 480. We got a critical support at 478 and then 474.7-ish. Those levels need to break down. Now, I would be bear buys below 474.7. It's a buy zone, but it can mess up this structure of higher highs and higher lows if we can break down that support, which could be a shift in trend and be a lot more bearish. Okay? Meta, this stock is just bullish. As long as above 378, stay bullish on it. Next resistance is at 384.5. If 384.5 clears, new all-time highs coming. 380 and 378 are support. If you want to play a false breakout, those are the levels that I would reference. And then short. Okay? Amazon is retesting a previous resistant level, a fib level, previous high, which is at 155.6. If that clears, bullish with 157 or higher in play. I'll only switch bearish if 154 and 152.6 supports fail. If those levels fail, bearish, I'll favor some downside, okay? And semiconductor, SMH. It did clear that 177 level. This was Thursday, and then the next day it showed follow through. I got the next critical fib level at 188.4. If that level clears, we're heading up higher. This is new all-time highs, I think. Yep. So I don't have any fib extension level until 197.3. Okay, so for all the people that complain, Uncle, your levels are always close to each other. Well, now that we're flirting with new all-time highs, my levels are going to be a lot more spread out as long as the SMH continues to be bullish. Okay, so above 188.4, I don't have nothing until 197.3, but be careful. Do what you feel is best. All right, just trade with the price action and traps. All right. Speaking of traps, if we're gonna get a pullback, we need a trap, right? I have support at 185, 183, and 181.4. Okay, those are supports. If those levels fail, that would put a retest of 177.3 possible in play. And if we break that down, that's a false breakout based on this fib extension level, and I would be bearish. All right, guys, let's end this with some dark pool stuff. I'm gonna have to sign in here. Here we are. Here we go. So this is Friday. Okay, so the most activity you had was at 476.5. Once again, actually 50% of the activity was at that 476.5. It was previously one of my levels, but then I eventually moved it up to 477 because I don't base my levels on dark pools. I base them on the charts. But yeah, that's where most of the orders are coming in. That's about what? 4.7 billion. That's a lot. And then we got some around 478.39 and 478.4 billions, 2.48 billion, 1.1 billion. That's a lot of liquidity. And then at the top, we're at 1.5 billion coming in at 482.4 and 2.2 billion coming in at 482.39. Okay, so dark pools getting busy at the higher level at new all-time highs as well. Definitely you can watch that as a resistant level. Okay. Here we go. SPY. Here's the flow. Filter for 500K premiums or above. And it's bullish. It's bullish, guys. QQQ is bullish. Oh, IWM is bullish. They agree. It agrees with SPY and QQQ today. NVDA is bullish. Tesla is bullish. Apple's bullish. AMD is bullish. Microsoft, bullish. Is there anything bearish today? Or last week? Oh, here we go. GOOG. It's crashed on Uncle Charters. Why, Cheddar Flow? Why? Anyways, all right, guys. I appreciate you guys for being here. I hope you guys found value in this video. Hope you guys learned something. I hope I was able to offer something to you guys, okay? But yeah, good luck this week. We got a full week coming up. Remember to trade with the traps. Price action is the shepherd. And stay tactical. And peace.